Hey guys, RC Peck here with Fearless Wealth. And man, I've been hearing so much about dollar printing, reserve currency. I've talked about this before, and I'm gonna talk about it again because I keep hearing it through different channels or different people talking about how they're really, really worried about the crash of the dollar. And whether it's the crash of the dollar, or the crash of gold, or the crash of the stock market, um, the word crash is a very triggering word, and you may agree, but if you then repeat it, you're kind of in somebody else's narrative. You're in someone else's story. You're a character in somebody else's story. You're a product of somebody else's business. And so the place that I want to get my training clients is a place where they are unattached to what happens. Now, clearly, you want your money to grow. But I find the more you are attached to the outcome of what you own, the more you know about the stock you own or the ticker symbol, the worse you're going to do. So if you look at the screen here, this is a price chart of the US dollar. And it could be easily, I could easily show you the same price chart to scare you. I could show you something like that. Show you. Actually, we could even take a little bit less off it to make it even a little scarier looking, right? We could just show like the fall of the dollar, and you could show how much it's falling. I mean, clearly this chart could be made much scarier looking. But depending on what time range you look at, and depending on if you want to scare someone or not, you can do that. So I'm going to go back to 3.5 year time range and look at the US dollar. And again, I want to come back to this because one of the first steps, one of my kind of core principles is you got to filter information coming into your body and into your brain and into your cells. And it's no one's taught, no one's trained to look at pictures. And if they are, they're taught to look at really complicated pictures. But here is the US dollar, and I'm going to do a big zoom out. Maybe I'll just go out 20 years. Let's just see what information we get here. So there's the US dollar. And there's the US dollar through all the money printing. The majority of the money printing started post 2008. And you can see that the dollar has been going higher. So clearly, dollar printing has has not really hurt the dollar. I'm just putting a trend line on here. Get it over here. So clearly, all this money printing, if you actually look at the dollar, I'm just looking for a way to give some sort of sensical trend lines. It's generally speaking, it's been going higher, right? Now, clearly, if I were to frame the US dollar this way, it's been on an uptrend since 2008, and now it's breaking down to a lower band of support. Now, whether it gets supported there or not, the point is that when you get hit with information, and we are getting hit with noise and information constantly, it's only going to accelerate. The first thing you have to learn how to do is to filter that, and is to create a filter, because the brain, that's what the brain is. The brain's a filter, and you've either taught your brain to let in the garbage, or you've trained your brain to not allow it in. Now, the good news is you did it, whether you realized it or not. It was maybe an unconscious choice, but it was definitely a choice. Now, that's just one thing I could have done to this price chart. And the point is to look at a price chart and get to a price chart and the proper price chart. And there's a lot of nuance to that. But another way is to just kind of see the dollar has kind of been in this range for quite some time. And it may pop out of this range, but it's just a range that it's been. And you can see it popped out here at the end of 2016, beginning of 2017. And then it did another pop out here. And it's clearly coming down to check the bottom of this support to see if it wants to maybe come right back down here to the 88, 89 range down here. And if it does break that, then that's a separate conversation of it weakening. That doesn't mean the world's ending. I just want to put in, I see another kind of support here. And I don't like yellow for this. Right? So it clearly has decision making right around here where it's either going to bounce off it or it's going to support it. So understanding what you're looking at, and look, a weaker dollar isn't necessarily bad. Now, if you're married to your stocks, and your stocks are going to do worse when the dollar falls, then that's a separate thing, right? That's you being in love with what you own and being like, oh my God, I'm going to lose money because the dollar's falling. My suggestion is you get trained to be detached from what you own. So the thing is, the dollar's been going up and the dollar's been going down. Now, when the dollar goes down, money has to go somewhere because money is pretty smart. Money is looking for the place in the world where it's treated best, right? So money is absolutely going to go somewhere. I don't know if I remember this symbol. Here we go. Let's just look at Bitcoin for a second because I also am hearing a lot of people talk about Bitcoin. Guys, I don't really have an opinion on anything. My suggestion is you practice not having an opinion. But here is the Bitcoin to US dollar index of it. And I'm going back 3.5 years. So look, if this thing breaks above, and I'm bringing this out now when I'm talking about the crash of the dollar, because I'm sure the people who are telling you the dollar is going to crash is selling you either a precious metal mining newsletter or some sort of Bitcoin newsletter. But the one thing I'll just point out about Bitcoin is, at least historically, it's had a hard time staying above this yellow area. Now, historically, the thing hasn't been around that long, but at least going back to the end of 2017, it looks to me very similar in a personality with the dollar. Like it popped out, came back in, popped below, came back in, the little squeaker out, little squeaker down. So look, if it can break out and above and stay above that, clearly it has some resistance to break through. But that's what one would want. Now, this is not buy Bitcoin, sell dollar. This is more of using price to kind of look at what's going on. And by looking at price and using price as a filter, you start to train yourself to be less attached, to have less of an opinion with what you own, meaning whether you own US domestic or you own international ex US. The thing is, you're looking for things that are going up and to the right. Okay, so I wanted to show you Bitcoin in the kind of context of apparently the dollar is going to crash and inflation is going to go to the moon. So just look at this is the 10-year. Oops, this is the 10-year US Treasury yield chart. So this is showing you what the 10-year US Treasury is yielding. And today, if you give the US government $1 million, they will give you $6,400 a year. Now, that's a pretty good deal because if you give the same $1 million to Switzerland, they will give you a little, well, they won't give you anything back each year. They'll take a little bit of that $1 million from you because their 10-year yield is negative. So I'm not seeing any inflation show up on the 10-year yield. And I would believe that that may be a place that that would happen. The other thing is you want to look at precious metals. Here's GLD. This is the probably the most followed ETF for the metal, this and IAU. And I think probably the better thing for me to do is to really zoom out and just let's look at what's going on with gold and even silver. Because if the US dollar is going to crash, a possible area that money would flow into is gold. Now, I say a possible area, it's already flowing into gold. So this isn't a possible area, it is already happening. And I've talked about this many times. Gold breaking above this kind of 1385 was a really big deal. Then it had to break above this area right here, about 1600. And notice now this is gold priced in US dollars. So notice that the last kind of major resistance was this $1,800 range. Now, I do see this 1901 here, and the price is above that. But to me, the stronger resistance is right here. So to me, when I look at gold, I think first of all, anything above those that the top blue line, you've got to be bullish on gold. You don't have to be investing in it, but you certainly can't be bearish on it. I'm not sure why I understand why someone would be bearish on something making new lifetime highs because they look at this and all they can see is how far it can fall. But they've been trained to believe that. That's I call that investment vertigo. New lifetime highs are a sign of stability. If you want to write that down somewhere, Something making new lifetime highs is a sign of stability and what that is measuring. So you got gold here priced in US dollars making new lifetime highs, and it is consolidating above its old lifetime high. And as precious metals goes through this, silver will do its job moving through. If we stay in that bull market, silver will continue to move through its resistance and its resistance points, which it had to. If you look across this price chart, this is also going back 15 and a half years. It had to break through that 19-ish dollar range, where over the last 15 years, that's been a pretty important area to break through. Now, it did it in a very fantastic way. But then notice the next major resistance, and this came up in one of my coaching calls, is right here. And I was showing this to a training client before it paused here. And I said, well, don't be surprised if silver pauses in this $27, $28 range, because back in 2011, 2012, and 2013, that $27, $28, just for simple math, call it $28, was a really significant place for it to pause. And lo and behold, silver is pausing there. So there's a little fight going on between the buyers and the sellers. So as you get hit with noise and marketing material, your brain's been, first of all, if it's affecting you, then you know that your brain's been designed to allow this noise and confusion into your life. And that's what's actually hurting. The noise machines are not going away. They're all $1 trillion companies, one Apple, one's a multi-trillion-dollar company. They own the App Store, so they get to decide what apps are on your phone. So they are also in control of the noise machine. So you're up against trillion and now multi-trillion-dollar companies. My suggestion is you get a new filter for your brain. And that can only happen through training. So what I wanted to just have you kind of notice is, I'm hearing a lot about the US dollar losing its reserve status. Um, okay, I mean, it can happen. I'm not attached to whether it has the reserve status or not. I don't think it will affect my life. There's 450 million people living in Europe that are not using a reserve status currency. I'm just going to a 50-year price chart of the US dollar. So there's many countries around the world that have currencies, and almost all of them are fiat currencies that are operating just fine without a reserve status. This is the US dollar going back to 1973. And it just kind of generally looks like it's been losing its purchasing power over time against the other fiat currencies, because that's what the denominator is on this price chart. This US dollar is being divided by a basket of stocks. And what I see mostly is just, I'll put it on here. I kind of see it's pretty big, but I just kind of see this general trend line. Let me just put it here. Just kind of looks something like that, where it's generally speaking weakening over time. Obviously, there's multi-year, multi-decades where it spikes, but notice the spike was really high in the early 80s, and the spike in the early aughts became less spiky, and now we had maybe a double spike. It's losing its spikeness, right? So that means people are not flooding into it as much as they were in the past. They really flooded into it in the early 80s, less in the aughts, and even less now, which means money's flowing other places. It's flowing into other fiat currencies. It's flowing into maybe more precious metals, but money continues to flow where it's treated best. And if you can at least get the idea that if you are unattached to what you own, or if it's like, great, so the dollar loses reserve status. Well, there's only 5 main asset classes on the planet if you separate fixed income into 2, bonds and currency. If you don't, there's only 4 main assets, and money is always flowing to the asset that treats people best. I want to quick share with you one of my 3 beliefs that needs to be shifted in order for you to get more control, the certainty you want over your money. And this is a shift kind of based on effort. So let me just read this to you. It's just too hard and would take too much effort right now. This means to really get the results you want and get the control back over your money and be the steward you want to be over your money and your wealth and your finances. and too much emotional bandwidth, which is very similar to effort. I'm already feeling full. After all, I've read the books, taken the courses, been in the markets for years. There's just been too many cycles of winning and losing. So there's also that inconsistency. And there's that inconsistency because people often follow approaches that are very, very difficult for earthlings to follow. Maybe if you were like a Vulcan, that would be fine. But the fact that you're not, people follow systems and approaches that just have very low compliance over time. Right. So people often believe consistent, great performance takes a lot of effort and hard work, but actually that's wrong. And if you just notice doing something right the first time, always takes less effort. Then you get control back over your money. So the thing I just want to offer up is what I often hear sometimes is someone says, well, I'm doing X and I'm getting Y, right? So I'm spending an hour or two a night, or I'm spending 4 or 5 hours a weekend, or I'm spending 20 minutes a day, and I'm only getting this result. Therefore, if I want to get a better result, I need to increase my effort. I need to go to 3 hours a night instead of an hour and a half if I want to get a better result. And it's actually just the opposite, right? Money doesn't like effort. And I think you would agree that buying something the right way actually takes less effort, right? Knowing where you're going and planning it out and looking at a map, taking a few minutes takes less effort when you actually get in the car and go there. So this third shift, there's three main shifts, but this third shift is about, it's actually not about more effort, guys. It's a different mindset. It's a different approach. And so if you're thinking, I need more time, then that's, now I'm letting you know that's a trap you've put yourself into, or someone else has told you. I'm just backing out of this US dollar price chart. So, guys, as we move into the election, whether you live in the United States or not, you're going to continue to get bombarded with scarier and scarier information. And your job as the steward of your money, whether you have a big box advisor or not, is to get control back over it, is to take a deep look at what, if they're doing it or you're doing it or no one's doing it, but really take a look at what really needs to shift, and it's not more information. Again, guys, I am RC Peck. This is Fearless Wealth. I'm so happy for you to be here. And this is just another step in helping you get control back over your money and your finances and your life. All right, guys, thanks so much. And I will see you on the next video. Okay, bye.